Hello everyone and welcome to Day Trader S&P 500. Today is October 30, 2021. It's a Saturday and this is Dale Woodson, editor of Woodson Wave Report. We have a lot to cover. I want to start with something a little bit different. We're going to look at the long term of the S&P, a weekly log scale here. And you can see, let me kind of work a little bit backwards. When I first started doing Elliott Wave, I could always spot fourth waves and work my way backwards from there. And I think I was the first actually to spot this expanding triangle in the middle of it. And it's definitely an expanding triangle, and it has to be a 4. Okay, previously in all these years, I thought that this was a decline, 2000 to 2002, and this was a decline, 2007 to 2009. But once I saw that that was a triangle, I realized when I did the math that it corrected this from 2009 to 2018. So working backwards, which is kind of how I learned Elliott Wave in the beginning, back in the 90s. I saw a 4, so that made this a 3, and that made this a 2. So this entire decline here from 2000 to 2009 is one decline, not two, and it's a wave 2, okay? And that's a wave 3, and that's a wave 4. And working backwards again, then where is 1? Well, you can start it from 74, you can start it from, I'm talking about 1974, 1982, but the math works out more from 87. But the big thing about this is if that's a 4 and that's a 3 and that's a 2 and this is 1, or this is 1, then what is this? And look at this with the purple line. See that line of ascent there? See that line of ascent there? Is there anything look familiar with them? They look the same, don't they? I remember 1932 to 37 was the same as 1982 to 87. And 37 ended with down to 42, all of Elliott's stuff. And this looks like another bookend from 87 to 2021. This is either just 1 in primary degree of this cycle wave 5, or it is 5. And anyway, the bottom line is the market needs to correct at least this and possibly all of this. And this in red, this 4 wave here, expanding triangle, corrected this. So give you guys a little bit of my thought process, and I started working backwards from 4s. They were so easy to spot, whether they're expanding triangles or long sideways patterns. There weren't many expanding triangles. You get contracting and all other stuff. But anyway, this is what we're looking at here in the long term, just to give you guys a perspective, and we'll see what this is doing here. And speaking of that, I want to show you guys another. Here we go here. So I think we're going to correct at least the move up from the pandemic low, and you can see support, 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 and then it crossed it. I think that was on the October 20th. I don't have the dates there, but it crossed below it, and as you know, classic resistance becomes support, and support becomes resistance. So may have just peaked over that Thursday and or Friday, but that line should be a resistance line going forward. So we'll see how that works out. It's the first time it's crossed it since the March lows, and it has shown very strong support all this time. That's almost 2 years. Okay, let's get out of that and let's get into the S&P here. I've got an hourly chart of the S&P, and there's the orthodox top on September 2nd, and there is an A wave down. I got a lot of different counts on here, and there's a B wave up. These purple lines represent ideal Fibonacci extensions for expanded flats. Expanded flats have never, in my 30 years of doing this, have they ever been a primary wave count. Straight bearish count was the primary count. Expanded flat was alternate count, and it moved to primary status with this move up above the 9.2 all-time high, which is no longer the all-time high. Okay, so and I'll get into this purple. I got to remind myself. But anyway, just so happens that 4608 is a perfect 1.236, and I want to move that down because it's, whoa, I didn't want to do that. Bear with me here. I messed that up. I want to move that, and I did it again. All right, I'll leave it up there. But this 1.236 in red is this line right here. You can see it there. I'll make it bigger for you guys. So that is the first ideal Fibonacci target for the B wave expanded flat. There's another one at 1.272 at 46.18, and another one at 1.382 at 46.48, and another one at 1.414, which is 46.55. But at Friday's close, it hit right on, and that's off by a bit because I moved it right on 46.08. Can I grab that? There it is. Okay, there we go. It's underneath it there, but that is the primary wave count now. And like I said, in all my 30 years, I've never had an expanded flat as a primary wave count because most of the times they don't work out. And this one may not work out. We'll see. We have our make or break parameters as usual, and obviously this is the highest one for the expanded flat. After that, the bull count comes in. The bull count is in purple. It counts this low on October 4th as the end of the correction. Okay, you can see a 1 up and a 2 down, and then 3 is subdividing. You can see a purple 1 there, purple 2 there, a huge 3, 4, and a 5, and this would be the most minuscule 4 you'll ever see. Okay, from here is where it gets really sticky, complicated. It's hard to make a bullish count out of this from that 1027 low. Okay, you can see there's just so much overlap. Let me see if I have that in my where is it here? There we go. Here is that count. There's from 10.4. There's 1 and 2, and then subdivide 1 up, 2 down, 3 up, 4 down, and all of this here. You know, this one right here overlaps that low there, and this one overlaps that low there. It's hard to get a 1, 2, 3, 4, 5 without maybe calling it an ending diagonal triangle where it overlaps, but it's going to be hard for this to count to get up to the wave 5 target of 46.73, which is the bullish count. We'll see how it plays out, but let me see if I can get that too. I think I got that in a 10-minute bar. Yeah, I got it here. And do I have it here? I have it here. There's all kinds of marks on here, but there again is that, well, there's the October 27 low, okay, and it's hard to get, see the overlap here, that's hard to get 5 up to where A is, and then there's down, then there's 1, 2, 3, 4, 5, and then there's down, so this counts okay, and this could be a new wave up, so we'll see how that plays out, but it's hard to get 5 waves here without a beginning diagonal triangle in this count right here. Okay, and I got the expanded flat within the expanded flat. This is from this October 6 low, but I was really just using this, not those purples, to get wave 3 high. So if that is, well, I've got it marked on that picture here. Let me review that for you guys. There's so much to cover here. Weekly log, hourly, and okay, here's our expanded flat picture with all those targets I showed you in purple. Okay, and that would be the make or break for the expanded flat B wave high. There's the orthodox top, and I'll get into that soon too. The orthodox top, the A wave low, the B wave high, and there's where C is a 1.618 of A, and C will be equal to A, just short of that. I think I have that in for our customers over our paid subscription service. Speaking of that, I want to thank you guys for subscribing to our channel. Don't forget to hit that reminder bell and the like button at the bottom. And I don't know that I have that like button here, and we don't. Well, there is one, so I appreciate you guys pressing that button. All right, I want to show you guys. I might as well get into this this Fibonacci time spiral from 1999, because the one we're doing now, it so much reminds me of this, and this was the first one I did, and this one started out as a daily spiral. You can see it was catching all these turn points here, and it was amazing because, by the way, I updated this later. It went all the way to 2006, but it began as a daily spiral, and the one from March 4 low reminds me of this so much because I just converted it to a weekly to our monthly subscribers. By the way, I forgot to mention our subscription services there. You can see annual, monthly, and video on demand. And also, don't want to forget to show our disclaimer and our awards over the year. By the way, haven't had any awards lately because Timer Digest doesn't do it anymore. In a bull market, those people who time markets or do technical analysis are shunned. So anyway, that's what we have there. But let me get back to this. This one I started in 1999. I called the orthodox top at 824. Does that ring a bell? I got the orthodox top now at the September 2nd high. Okay, yes, the market made a new higher high on January 14th, but it honored and respected and paid homage to the 824 spiral for 7 years, and I'll show you that later. Okay, but you can see here, even this was allowing us to predict the 114 high. There's plus 144 days equals 115. That was off by a day. You can see right there. From there, we got the low. Again, 55 days after the high, there's the low. Then we got another high. And this spiral not only predicted this low within a day, but predicted that high within a day. And then, of course, 55 days after that high, we got another low. So you can see where that 55-day comes in, and we'll get into that again on our current spiral. But this started out as a daily spiral. You can look at that. Oh, what I did want to mention is the slippage. The slippage is a Fibonacci sequence within itself. This was off by 1 day. Next Fibonacci number, well, there's the 2 in there, but in a sequence, after 2 comes 3, then 5, then 8, then 13. It's amazing how this math works out, that even the slippage within the spiral that's calling the turn dates has its own Fibonacci sequence. To me, that was just amazing. But then we turned that into a weekly chart and on a monthly bar and got a weekly spiral. And here you can see that spiral predicted the highs for 7 years up to, if I can get this steady, to 2006. Did it catch every high? No, it missed a couple here and there, but for the most part, these were all highs, as you can see. There's one maybe missed there, one maybe missed there, but and I reprinted this, or this was in 2006, and then I reprinted it later in 2017 to show all the slippage up here, and you can see where it caught all those highs, okay? Now we have the spiral from 3-4, if I can get into that. I think I got it down here. Let me see. Yeah. And this one here is missing virtually nothing. And then it has finally slippage with this 1023 high. We got the 1029 high, unless you want to count the expanded flat. So we'll see how that works out. But for our paid subscribers, I converted that into a weekly spiral, and we'll see how that goes. Can we get 7 years out of that? I don't know. We're coming up on a year. 377 is close to 365 days, and so far so good. Almost perfect through 144 and then 233. And a reminder that this spiral here is the first one I've ever started from a low. The other ones, even going back to the one 1999, I started from a high because I was always looking for a low. And that being said, that 34 days from the all-time high, I don't know if I have that here. I may have to go. That's the 3-4. That's that. Which yeah, here's the one that's showing the one from 3-4 with all the turn dates. It starts off just like the 1999, catching highs and lows, and then now it's caught 4 highs. Did it catch everyone? No, it's missing one there, just like the other one, but it's catching highs. So this Fibonacci time spiral from the March 4 low really has piqued my interest. We'll see where that goes from here going forward, okay? And you can see our top alternate count here, again with that too much overlap. I wanted to find that that spiral, and maybe I can look through here. Bear with me a minute while I look here. Yeah, we got that 1030 over here, the 7.6. Yeah, the 9.2. Let me see if I can pull this over here, and let's see if we can get this one from 9.2 here, okay? And that's got that missed that high by 50 minutes, and the next turn date in that sequence is November 30th. So we'll see how that plays out, and I believe we have November 30th over here as a Wednesday. So we'll see where that goes, okay? All over the place here, as we got so much to cover. Okay, let's see what else we have here in our picks. We had that spiral there that showed that. We had that spiral there, and that's how that one in 99 started. This is a review of it where it caught the low, the high, the low, the high, and then highs on out. And I converted it over from a daily spiral to a weekly spiral. Let's get out of that. And there is the one with the slippage on it there. Okay, on a weekly basis, and it went through 2006. We'll get rid of that there. What do we have over here? We showed you guys that. Support turns into resistance. So much to cover all my notes here. That looks like the same thing. I guess I pulled that up twice. And there is that monthly bar. That's a little different picture when I first printed that in December of 2006. And it caught that high. And then, you know, in 2007, the market busted. But this worked. This worked for 7 years. And the spiral from March of this year reminds me so much of that. Let me see what else we have here. We'll get into Tesla. I don't know, we'll get into bonds. This one we showed you guys or not? Yeah, that's the one. That's the spiral from the 3-4. Okay, there's the 1029 high. And this, oh yeah, this is the weekly part of it here, where it turns into a weekly one and the week of. This thing's going out to March of 2022. So we'll see how that plays out. That's way down the road there, okay? What else do we have here? That's Tesla. We'll get into that. And we may get into that right away. Bonds, the hourly. There's our B wave, expanded flat make or break, and targets there. By the way, the S&P reached a perfect 1.236 multiple for wave B high to wave A. The Dow, no. The NASDAQ, no. They're nowhere near. Okay, but the S&P is there. The other markets made new highs, but they're not near the Fibonacci extensions that the S&P is. You can see the target down there. Okay, what else do we have in these picks? And we showed you that. I'll get rid of that. And we showed you that. I'll get rid of that. So we're going to see how this thing plays out here. This, I guess we can call that a beginning diagonal triangle in 1 and 2, and then 1, 2, 3, 4, 5 for 1 of 3, 2 of 3, 3 of 3. This keeps breaking up here. Breaking to the upside is what I mean. Then you can see right here from that October 22nd low, we have 5 waves up. Okay, let me get a retracement of that. All right, let's see. We're looking at a 5-minute bar now. Okay, and you can see that did a perfect 618 retracement as an ABC. Okay, so let's move that out. Remove that. Okay, and then this conglomeration here is something. There's no 2. It's a 1, 2, 3, 4, 5, 6, 7. And then all of this. This could be a 1, 2, and then maybe a big expanded flat over there. But this is a little bit messy, if you will. There's a couple different ways to count it. But here we have a 1, 2, 3, 4, 5 up here. We're looking at the bullish count, guys. Sorry, I didn't warn you what we were doing here, but I'm going back to the shorter term, and you can see there's 5 waves up with a 382 and a higher high. So this could be a 1, this could be a 2. Okay, let's label that. We're looking at this bullish count, which will come into play as soon as those make or break targets for the expanded flat are exceeded to the upside. And I will make this a bigger degree of trend. Let's get into that there. We need degree. There it is. Make it sub-micro. Okay, so there is from the 22nd. When we go back further, but here's where it was messy. A 1, 2, 3, 4, 5. 4 stays above 1. There it is. We already saw that was a perfect Fibonacci retracement. ABC. There is 2. Where does 3 go from here? Let's get an extension. Bullish count. There is 1. There is 2. And where's our 3 target? Let's move this over here. And we get a 46.27. Okay. And this is 1, 2, 1, 2. So it's like 3 of 3 of 3 of 3. So if that's the case, this will have no problem getting up there and even further. That is the bullish scenario. We'll see how that plays out coming Monday. Okay, I wanted to look at Tesla here because the bull count obviously won out. We've We even show where we had the bull count alternate and the make or breaks even a month ago in September. But this really took off, just like way back here. It's not even on the chart. These things went up. These third waves were ridiculous. This third wave target where we got a 1 from the 519 low. By the way, this was an A, B, C. Okay, a 5, 3, 5 correction. Okay, wave C did not quite gain equality with wave A. It stopped short. And then we have a 1 here. This is a beginning diagonal because 4 overlaps. There's 1, 2, 3, 4. This 4 goes below that wave 1 high. I don't have it labeled. I can get into that chart and show you. That makes 1, that makes 2. 3 equals a 2.618 at 1127. If it just keeps going without a move down, then we're looking at 1311 for a 3.618. Let me see if I have Tesla up here on the board. And I do. And there's that internal count. I don't have it quite tight, but let me move that 4 up. You can see the wave 1 high there. I've got that dotted line. You can see right here, this, A, B, C, D, E. This is a 4. It looks like a 4. It looks like a 4 and sounds like a 4. It's a 4. It walks like a 4. And that was 5 for 1. Okay, so it started with an overlap with a beginning diagonal triangle, and then 3's gone off to the races, and we left the all-time high at 900 in the dust. Okay, so that's the analysis for Tesla. 3 should be at that 11 something target, and I think that's about it. I'll leave you guys with no, I got rid of it. Okay, I'll leave you guys with Tesla here, okay? And until next time, take care, everyone.